Good morning. This is Robert Sijpesteijn giving you this morning's market update. In the US, the Federal Reserve signaled that it remains on course to increase interest rates this year, but the central bank left its options open as to when this would take place. Yesterday, the Fed left its target range for short-term rates at near zero level they have occupied since late 2008. The Fed previously said it wanted to see additional improvement in the labor market before being confident it was time to raise rates. The central bank now says it wants to see some additional improvement, suggesting that the figures are nearing its goal. While the central bank did not give any explicit hints on whether it would move at its next meeting, analysts have said that the increased confidence it displayed on the employment front could suggest that a move was possible. Due to the positive outlook of a strengthened economy and job market, the US markets continued their rise yesterday. The Wall Street rose 0.69% to 17,739. The S&P gained 0.73% to 2,105.73, and the US Tech 100 added 0.44% to finish at 4,569.13. After the market close, US tech conglomerate Facebook released their Q2 results. Despite beating market expectations, after market hours the price dropped 5%, however has since recovered out of hours, currently down 1.67% at $93.76. In the commodities market, we saw a slight rise from the ever-falling gold and oil prices. US light crude closing yesterday up at $48.91 a barrel, and Brent crude higher than the day before but down from the open at $53.57. The low-level oil prices are being felt by some of the major providers, with Royal Dutch Shell reporting a cut in jobs of 6,500 and aims to reduce capital spending by 20% this year. Shell reported a 37% fall in second quarter earnings to $3.8 billion. Gold closed up for the day at $1,097.8. However, the future outlook is bleak, with prices expected to drop to $984 an ounce before January, which would be the lowest level since 2009, according to an average estimate in a Bloomberg News survey of 16 analysts and traders. Moving to Europe, the UK 100 climbed 1.2% to 6,633.6, thanks to positive sentiment around Hikma Pharmaceuticals, adding 3.7% to an 11.6% jump on Tuesday. GlaxoSmithKline gaining 3.5% due to the pipeline of new drugs and vaccines in development, and Barclays up nearly 2% following a reported 12% rise in profits. The Germany 30 closed up 25% at 11,234.4 yesterday. The market may be set for a volatile day, with Tsipras set to face challenges of his authority today as the Central Committee of his governing Syriza party meets to discuss the Prime Minister's plan to hold a snap election as soon as Greece signs up to an €86 billion third bailout. After abandoning its earlier vows of unity, an anti-bailout faction of the Syriza party, led by Panagiotis Lafazanis, the former energy minister, appeared to be preparing for a showdown that could split Syriza and deprive Mr. Tsipras of his parliamentary majority. In today's corporate news, GSK faces new corruption allegations in Romania after a record fine of 3 billion yuan or £310 million for corruption in China last year. Santander grows second quarter net profits by 17.7% year-on-year to €1.71 billion. Global reinsurer Swiss Re reported an 11% rise in first-half net income to $2.3 billion, and German airline Lufthansa has benefited from lower fuel prices to make a net profit of €954 million for the first half of the year. Today's data in focus is at 10 a.m. in Europe, the July consumer confidence and business climate, and at 1:30 GMT, the US are releasing their GDP, their initial jobless claims, and the trade balance. That's all for today's market update. Thank you and goodbye.